Welcome to the June 12th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report, and hopefully it serves as a nice change of pace, as well as offer some insight as to how we set up our charts, what time frames, and indicators we use. And in tonight's report, we're going to go over a few broad market averages, as well as current open positions and where we're placing our stops for tomorrow. As for potential setups for the next few days, given Thursday's price action, we don't really have anything that we're looking at to buy for tomorrow. That would be more of an intraday decision if anything looks good and there happens to be some sort of gap down reversal in the market on the open. So that's something we'll probably address tomorrow in the Slack chat room. Thursday's 5% sell-off in the Nasdaq and S&P is about as ugly as it gets for selling in the middle of an uptrend. One interesting thing to take away, though, was that our open positions in the model portfolio, several were only down 3 to 5%, and then we had SQ down 6 and Twilio down 7. I'm a little bit surprised that these growth stocks did not sell off anywhere in the 8 to 12% neighborhood. So the Nasdaq Composite one-day pullback to the 20-day EMA, which comes just a few days after setting an all-time new high. And if we look at the weekly chart, today's low is close to last week's low, so maybe there could be some sort of dip lower on the open, which takes out last week's low, and then a bounce. Either way, unless there's some kind of miracle reversal back up, this is a pretty ugly candle on the weekly chart here. A break of the 20 with further downside tomorrow would suggest that the trend has lost momentum and is now likely headed sideways to lower over the next few weeks. On the S&P 500, there's just a nasty gap down and pull back into the 200-day moving average. It would be tough for the S&P just to turn tail and push right back through this wide range bar. Without a few weeks of chop, we would think at the very least. As of Thursday's close, the S&P is looking like a potential bearish engulfing candle, but that could change by Friday. But either way, an ugly week and a nasty day of trading on Thursday would suggest at the very best maybe some sideways action or possibly even a test to the 50-day MA given the recent volatility. Anything can happen. Thursday was pretty damn ugly. Let's manage our stops and let the market decide just how invested we're going to be by the end of next week. On to open positions in the model portfolio. Not listed here is Netflix, which we sold around 427 due to the ugly reversal off the highs. We felt there was just no reason to stay in Netflix since we had very little profit buffer in it. So we exited with a very small 1% gain. Twilio, our stops remain the same. We have 2 stops in place, each stop beneath prior swing low. We're looking for the 20-day EMA to hold, and we'll see if maybe there's some sort of gap on the open and then a recovery back up. That would be ideal for us. However, the market doesn't care what we want, and it'll do its thing regardless. So stops are in place here beneath recent reversal candles. SQ closed below the 10-day MA, and this is I believe only the second time it's done so in the past few months. So it is a sell signal if the price goes below Thursday's low on Friday. So we have a pretty tight stop in place here. TTD, false breakout from this bull flag type action here. Only corrected about as much as the market, which is impressive. Our stop is beneath the 20-day EMA and the low of this wide range candle here on 6-3. Tesla, we sold a third of the position at 984 per intraday alert for a 22% gain. And we also have a stop at 962, I believe, which is just a money stop. It's a stop for 2%. And why we're using the money stop is just to protect the 20% gain. We just want to at least have half of our profits at 20%. And the other half of the position, we're going to use the 20-day EMA as a selling guide. So we're going to be very loose with that other half. If you'd like to be more aggressive, you can sell the entire position at 962, or possibly even use this uptrend line along with the rising 10-day MA as a selling guide, and that's something we may look at as well. Next up is FSLY. We already have a stop in place just below 44, and after several bars of stalling at 50, if FSLY can't follow through, we're just going to exit with about a 20% gain on the remaining third position. And then we have CHGG, nothing to do here really. Stops have been in place for the past 2 weeks at 55.49. And Amazon, we have a stop beneath the 2-bar low here, but we are really looking for the low of this wide-ranged candle to hold. And if the stop would trigger, that would be slightly above break even, so just a very small gain. And as far as potential setups for Friday, we really don't have anything that we're looking at to enter, given how nasty Thursday's sell-off was. However, for example, if something that's pulled back into support, say something like Twilio here, if it were to gap lower and then reverse back through the prior day's low and the 20-day EMA in this case, that could serve as a buy signal to enter with a stop beneath the low on Friday, the morning low. So this is a very specific gap down reversal strategy, and really something that can only be traded if you are watching the market on the open. All right, that's a wrap for tonight's video. Thank you for joining us, and we'll see you again next week. Have a great weekend.